Welcome back. It's a 0.25% cut and 8,500 has held for the Nifty. The mid-caps are actually in flat terrain at an index level, and the Bank Nifty is the laggard, as it has been for some time now, so clearly underperforming with a 0.5% cut. And if you had included the public sector banks in the Bank Nifty, as they ought to be, then the index would have been a lot worse. Bank of Baroda, Union Bank, PNB, Bank of Maharashtra, Bank of India, OBC, all of them, Indian Bank, all of them in the red, between 0.7 and 1.5%. So that's the picture now after the first 10 minutes of trade. Let's welcome our market master for the day. Gautam Trivedi, Managing Director and CEO of Religare Capital Markets, has joined us.
Hi.
Good morning, Gautam. Good to have you with us, and nice of you to drop in at the studio.
Sure.
Well, we got a bunch of Nifty earnings yesterday, and we've got some early birds. What is the sense of this earnings season itself? Will all of you have more downgrades rather than upgrades at the end of the season?
I think it's early days to actually say anything, but the fact is the expectations are actually quite low, which is actually the good news. So the INFI, obviously, the way INFI reacted at 12% move, hasn't been seen in INFI in a long time. So the fact is that I think expectations were so low, and INFI's surprise obviously took the market by shock. At the same time, the other end of the volatility is what happened with Sun and their guidance for not so great results going forward.
So what's the view on INFI itself and the other IT companies?
Well, INFI remains a top pick in the IT space, and we believe that doesn't really deserve to trade at a discount to TCS. So we clearly think that INFI should regain some of its valuation gap that it has right now with TCS.
Oh, definitely, after what it delivered yesterday, for sure. Gautam, hi, morning. What about the markets itself? Is the risk reward favorable to invest into the markets now, or is it better to up your cash levels?
No, I think the risk reward is, I think, positive right now. I just got back from Asia. I was in Singapore and Hong Kong last week, and I was actually quite surprised to find, and I'm saying this on record, but the fact is, quite surprised to find that in spite of the fact that in China, companies can suspend trading in the stocks within 5 days, and for as long as 6 months. And when the market crashed 30%, as many as 60% of the companies had suspended their stocks. And unfortunately, foreign investors and domestic investors were compelled to sell the stocks that were not suspended. So there's further pressure accentuating the fall in the market. So imagine a rule like that, if it's allowed in India, we have walk. And in spite of that, what we found is we met over 15 to 20 investors. And we were actually stunned and shocked that the love affair with China still continues. So it's not as if, in spite of the 30% correction, in spite of the fact that as many as 60% of the companies were suspended, you couldn't actually sell, you couldn't get out of those companies. Foreign investors continue to like China, and are not necessarily, well, they like India, but they like China more.
Okay, so what is the lesson, therefore, that we shouldn't expect too much in terms of...
I think we should start allowing companies to suspend. That's a joke, but we shouldn't really do that. Yeah, I'm just joking. No, I think the fact is...
The real question is, at 8,600, will you buy? You say yes?
The answer is yes. Selectively, of course. I don't mean the whole market, but yes, the answer is yes. Very much.
So what would be the bright spots? IT, you said. Infosys, you said.
IT, autos. We like Maruti, we like Ashok Leyland. These two stocks will continue to do well. We've had these road trips, as you know. We've done 3 of these road trips to Gujarat, Maharashtra and Uttar Pradesh. And we found Maruti showrooms packed with customers. So I think that stock continues to remain one of our top picks. Ashok Leyland, I think, and the CV space in particular, the M&H CV space is having a major rebound. So we like that as well.
Okay, another stock you like is Asian Paints, and that one, although it delivered a good set of numbers yesterday, the commentary from the management was a bit cautious. Would that spook you, or would you continue to remain invested?
Well, I think I probably see where the management's coming from. First of all, I'm not spooked, and I think it's a great story. It's returned great shareholder value over the last 10 years. But the reality is that the real estate space within India has clearly slowed down, and it's not just a phenomenon for Mumbai or Pune or the NCR region. It's across the country. So that clearly has an impact on Asian Paints to some extent, right? So I think, I suspect some of that cautiousness is coming from there, but I think otherwise we are very much, we very much like Asian Paints and remains one of our top picks.
Okay. What did you make of the HUL commentary? There are 2 questions here. HUL, in terms of valuations and price, what's your call? And what were the takeaways for the FMCG space itself?
See, the thing is, from a valuation call, the stock's way too expensive. So most of the foreign investors that we've spoken to find the entire FMCG space way too expensive to actually put incremental more money to work. In fact, the stocks that we do like are names like Bata, which are surprisingly at 25 or 26 times forward earnings, and quite cheap compared to an HUL or ITC or Imami. But having said that, I think the extent of the rural slowdown that we noticed from our rural India road trips is really not as bad as the media was making it out to be. We found anywhere from 18 to 22% growth in FMCG product sales in most of the towns and villages that we went to, which was quite shocking and surprising.
So what about the Imamis, the Daburs, Britannias of the world?
Well, I think they're too expensive. That's the problem. I think it's just valuation. I think if these guys come down, we would recommend buying, and investors will look at them. But right now, most of these stocks are at 30x, more than 30x, should I say, FY17 earnings, and that's too expensive.
Okay. Well, let me come to the mid-cap space.
Sure.
Century Ply. This home improvement theme was playing out big, and in Asian Paints to some extent can be seen as the leader there. Century Ply's numbers were shockingly like 2% higher, and the profits were lower from year-ago levels. Is this a reality check, or is this a one-quarter phenomenon?
It might be a one-quarter phenomenon. I mean, like I said, the real estate space in general is struggling across the country for sure. But I haven't looked at, we don't cover the stocks, so I haven't really looked at the numbers. But I suspect it's probably to do with the real estate sector being weak right now.
Okay. But is there anything else in the home improvement space that you like in the, everything, Kajaria, Nitco, everything was running?
Yeah. No, we like that space in general. I think I'm thinking aloud about what else basically would work within the home improvement space. You've got paints, you've got, I guess, the Centuries and the plywood business. And of course the tiles. I think we like the tile space.
Okay. Yeah. In fact, that entire pocket has been doing pretty well. I mean, something like Century Ply has doubled in the last 1 year. Yeah. But talking about the stock of yesterday, clearly was Sun Pharma, apart from Emphasis, of course.
Sure.
That one is making an attempt to rebound, but not a convincing one.
Sure.
What should a long-term investor do there?
Very good question and very tough to answer because the stocks, I think, shocked. I think most people were shocked with the extent of the fall yesterday. And we would wait, and we wouldn't actually buy the stock yet because we need to see some more evidence, at least another quarter of numbers from Sun.
What would the IT pack as a whole be in terms of weightage? There were lots of doubts raised that these guys are not redefining themselves for the digital and social media space.
I think the interest level before the Infi results was actually pretty weak in the IT space overall. And obviously, people have been taken aback by the Infi results, and people want to see more evidence of a trend here before actually putting more money to work in the IT space. So we haven't really seen that much interest coming in to buy Infi or the other IT names specifically.
Okay. You started off by saying that the risk reward is favorable for an investor in our markets, but then you followed that up by saying that foreign investors prefer China over India.
That's right.
So from now until, say, the end of the year, or even for the next 12 months, what kind of returns can one investor expect, considering that we haven't seen any substantial improvement in earnings?
Yeah, I think the other factor, before I answer that, the other factor to keep in mind is the domestic mutual fund industry. And that continues to get money hands over fist. I mean, last month, they collectively took a net 10,000 crores. So that money, and I think more than half of that actually is going to the mid-cap funds. So given that massive inflow that we're seeing into the domestic mutual fund industry, this market's going to continue to be pretty buoyant. And I think in some sense, India and China have something in common, where the retail investor participation, whether it's direct or through the mutual fund space, is actually what's driving the market up more than foreigners.
Okay. Gautam, finish the argument on earnings. What is the expectation, and are you likely to be, is the risk upside risk, or is there a downside risk to the earnings expectation this year?
I think for the whole year, you mean, or for this current quarter?
I would prefer quarter, but anyway.
I think FY17, we believe FY17 is going to be the big year for earnings. It's not FY16. So I think expectations are low and should remain low until...
Low is what, high single digit?
High single digits, yes. Yeah, that's my definition of low.
Okay. Talking about some more stocks, the telecom space has come back into the limelight with Bharti, trying to sell some of its non-core assets. Idea doing well.
Yeah.
Is this a space that will give meaningful returns, you think?
I don't think so.
Okay.
I'm sorry for being blunt, but we don't really think...
that helps.
No, we like blunt.
We don't like the telecom space. And I think once you see Jio launch, I think there will be consolidation in the space.
Okay. What about, I mean, the inevitable auto ancillary space? You spoke about automobiles and the Maruti showrooms and the Ashok Leyland thrust.
Yeah, sure.
Ancillaries, because so many have run up?
The thing is the valuations, again, I think in some sense they've had a great run over the last 18 months. And the question really is there much value left going forward? So they're too expensive, and I think we're not really comfortable pushing them from these levels.
So I don't even want to ask you about Eicher Motors, because that is the most expensive of the lot.
It is.
You would be bearish there?
No, we won't be bearish. I think it's a steady stock which is going to give you a 15-20%. Probably the HDFC Bank of the automobile or the two-wheeler space for sure. So it's a buy and hold. It's in some sense like street cement. You won't get disappointed. You'll make money.
But is HDFC Bank a buy?
Yes, definitely.
Okay.
Good question,
what in the finance space is a buy?
Everything else but the PSU space, I think. And I think there's also one of the interesting things I found from this trip to Singapore and Hong Kong was that there's some degree of skepticism creeping into the NBFC space, and a lot of people don't still think NBFCs are a buy. So the preference remains the private sector banks, and clearly zero interest in the PSU banks.
Okay, so even the smaller private sector banks are disappointed, the likes of Federal, DCB?
No. I'm talking of the top 5 to 6 private sector banks.
Okay. Not worried about their steel exposure?
No, that exposure is across the, across...
Oh, it's even more for PSU banks,
yes.
But then that anyway you're not buying. You're buying the private sector banks. Does that NPA issue worry you?
Well, it does to some extent, but I think the question really is, do you need exposure to, if you need exposure to India, you need to invest in financials. If you need to invest in financials, what's the best space to invest? It's the private sector banks.
Okay. The biggest story this year by far has been the oil marketing companies and the gains we've seen over there.
Yeah.
Would you think the risk reward is favorable to invest into the BPCLs of the world, or has that story played out?
I think that story is not played out. These stocks have more than doubled, right? So really, the diesel dereg story is over pretty much, and that's really what moved these stocks. So I think beyond that, there's really not much else out there. I'm not saying that they're sales necessarily, but I don't see significant upside. That big move's already done and dusted.
Okay. Well, you did say that even at these levels you would buy, but is there moving up of the bottom as well in India? Looks like ever since the crude prices once again started tumbling, we've been receiving money from the FI counters as well.
Sure.
So has the bottom really moved up?
I think the bottom's definitely moved up, yes. Absolutely. And don't forget, there's one major event coming up in January, which is going to be the 7th Pay Commission money. Our estimates are $50 billion over the next 2 years that will be unleashed across about 15 million government employees, both central and state. So that's a staggering number. And if you look at some of the stocks that moved after the 6th Pay Commission, I'm not talking of 6 months, because that happened back in, I think, May of 2008. That was a really bad time from a market.
Home improvement.
Yes, Maruti.
I thought home improvement.
Back to home improvement. There you go. So some of that money is going to find its way into two-wheelers, the auto space.
So fact, hold your breath for 6 months, and there's demand coming.
Exactly. Yeah.
Okay. Just one final question then. You were telling us earlier on that you see quite a bit of traction for the market across the board.
Yeah.
But are there any spaces that you would completely stay away from now?
Yeah, I think metals are still right now an area we don't recommend getting into. We don't like the telecom space, as I already mentioned. I think these two specifically, I think, are...
Metals and telecoms?
Yeah, metals and telecoms.
All right, Gautam, we leave it at that. Thank you for joining us and discussing a